Hey, what's up, guys? Knowledgeable Trader here. I'm about to tell you guys about my journey into Forex. Firstly, when I got into Forex, I learned a few things about technicals, trend trading, and whatnot. But then, after some time, I got a friend who introduced me into fundamental trading, of how the fundamentals work in terms of trading. Firstly, just like you guys, or almost most of you guys, I was also told that fundamentals were hard and that I shouldn't do them, or I shouldn't trade with fundamentals. But looking into it now, as I've started learning more about Forex over the years, I found a person who taught me more about fundamentals and how they work. And he told me a lot about how fundamentals are actually correlated to Forex, and they are the reason why Forex moves the way they do, or the Forex charts move the way they do. And as a matter of fact, these trends and these candlestick patterns are actually triggered by the fundamentals. They are the reason why these candle charts or these charts move the way they do. I'm sure you guys are now asking yourselves, wait, how do fundamentals trigger the market? Okay, let me explain it to you in a very easy way to understand. You see, as the news is being reported on a day, for instance, something like oil or Brent crude are then reported maybe to be increased in the next few coming weeks or so. Then what people are gonna do is go out and buy more fuel or oil before the price of the oil or the fuel increases. And this is what we call impulse buying or selling. Then because of this, the price of whatever it may be is going to increase, and that's how the fundamentals trigger the markets or the price to change, or even vice versa. But right now I'm going to show you a textbook example of how this works with the Euro USD currency pair. Let's get into it. And just so you guys could see what I'm saying or see where I'm coming from, I pulled up the news that came from the Fed on that date. It was on the 1st of February, and I also pulled up the chart for the dollar right here. Okay, let me explain to you what happened on that day if you never saw or caught what happened. Firstly, the Fed came out with some kind of dollar bullish news. It wasn't properly bullish, but it wasn't bad either. Then the FOC statement came out, and Jerome Powell came out and told the people that he was going to raise the interest by 25 basis points, just so that the interest rate could, the inflation rate could not go above 5%. He was trying to combat that 5%. So he decided to increase it by 25 basis points. Okay, then after that day, the non-farm came out, and the initial claims, jobless claims, came out also, and they actually came out better than expected. And as you can see here on the chart, after that news that came out on the 1st of February, the dollar started to have a bullish bias instead of that bearish bias it was going through at the beginning of this year. Okay, let's continue scrolling through the news. As you can see, day after day, all the news came out better than expected. Then on Friday, right here, the non-farm actually came out. The non-farm payroll actually came out, and it came out way better than expected. And because of this, I now expect the dollar to be bullish for the rest of this month, or even the next few coming months. And that right there was my explanation on the fundamentals and how they trigger the markets, or how they make the market move the way it does. But if you want to learn more about these kind of things, I have more videos that are related to this one on my channel. You can just go to my channel page and watch more of those kind of videos. I even create shorts for these kind of things. But as you know, please don't forget to like, comment, subscribe for more.